Hello and welcome. We're going to be talking through something that is absolutely vital for anyone managing family wealth here in the UK, Form IHT100. All the information we're covering today comes directly from the expert tax advisors at My Tax Accountant. And trust me, with some of the biggest inheritance tax reforms in a generation hitting in 2026, you're going to want to understand this. It's a classic trap, isn't it? It catches so many people out. You do something with the best of intentions, maybe you're helping out your family or setting up a trust, and the next thing you know, you're facing a mountain of complex paperwork and the very real threat of penalties from HMRC. We're going to break down exactly what you need to know to make sure that doesn't happen to you. And just so you know, everything we're covering comes straight from a comprehensive guide prepared by the specialists at My Tax Accountant. Their entire job is to navigate these complicated rules day in and day out, so you can feel confident that this information is clear, accurate, and completely up to date for 2026. So here's our plan. We'll start with the new family of IHT100 forms. Then we'll get to grips with what a chargeable event actually is, the thing that triggers the need to file in the first place. We'll cover the all-important deadlines, take a look at the specific forms, then walk through the huge reforms coming in 2026, and finish up with how to get all of this right. Right, first things first, if you've ever had to deal with these forms before, you might want to hit the reset button, because the whole landscape has changed. HMRC has completely overhauled the system, and they've moved away from that old one-size-fits-all approach. And this really shows you the shift in thinking. Before August 2024, you had this one massive, often confusing IHT100 form that had to cover every single possibility. Now, the system is just, it's far more logical. There's a new family of forms, and each one is designed for a very specific event. It's designed to make the whole process much clearer for everybody. And here's a quick look at that new suite. As you can see, each form now has a very specific job. For example, IHT100A is what you'll use for reporting significant lifetime gifts, but the IHT100D is for something very particular, that 10-year anniversary of certain trusts, which is a key reporting milestone for HMRC. This whole targeted approach is really designed to simplify things. Okay, so we've got these new forms, but when do you actually need to use one? Well, the answer lies in understanding a key bit of HMRC jargon, the chargeable event. This is the trigger. This is what starts the clock ticking. Let's make this simple. A chargeable event is basically any action that puts a little flag on HMRC's radar. It's something they want to assess for inheritance tax now, not just when someone passes away. The most common triggers are things like large lifetime gifts that aren't immediately tax-free, and most activities involving trusts. Here's a perfect real-world example. Let's imagine Sarah from Bristol. 10 years ago, she did a really wonderful thing and set up a discretionary trust to help with her grandchildren's university fees. Fast forward a decade. For HMRC, that 10-year anniversary is a chargeable event. It's a milestone where they need to check the value of that trust and see if any tax is due. So Sarah's trustees now have to report this using one of those new IHT100 forms. Okay, so you've identified a chargeable event. This next part is absolutely crucial, and you'll want to hear this, because it's where so many people get tripped up. Let's talk about deadlines, because with HMRC, they are not flexible. You have 6 months. That is it. 6 months from the end of the month in which the event happened. So let's say a trust's anniversary was on the 10th of February. The form and any tax payment must be with HMRC by the 31st of August. It's a really strict deadline, and if you miss it, you're looking at automatic penalties. Now, here's a key tip that could save you a real headache. HMRC will not send you a reminder. They won't send you a postcard. The legal responsibility to spot the event, fill out the right form, and pay the tax on time rests entirely with you. So don't wait to be asked, because waiting is what leads directly to penalties. All right, we've seen the new family of forms, so let's look a bit closer at the most common ones. How on earth do you know which one actually applies to your situation? Let's break it down. This table makes it pretty clear. The IHT100A is your go-to for those large lifetime gifts. IHT100B is used when a beneficiary's right to income from a trust ends, which often happens when they pass away. C is for when trustees pay capital out to a beneficiary, and D, that's for the 10-year anniversary, just like with Sarah's trust back in Bristol. Every key scenario now has its own dedicated form. So what happens after you've sent the form off? Well, the good news is the process is quite clear. HMRC will write to you to confirm they've received it. They'll then give you a date, usually 12 weeks from then, by which they'll get in touch if they have any more questions. If you don't hear from them by that date, you can generally assume they have what they need for now. Okay, we've covered the system as it stands today. But now we need to talk about what's just around the corner, and you'll definitely want to stay with me for this part. What's coming from April 2026 isn't just a small tweak. It's a seismic shift in inheritance tax, especially for anyone who owns a family business or a farm. This is a massive change. For decades, business property relief and agricultural property relief have been the bedrock of succession planning. They've allowed countless family businesses to be passed down without being torn apart by a huge tax bill. From April 2026, that 100% relief is going to be capped at £1 million per person. Any value above that cap will only get 50% relief. This completely changes the maths for passing on your legacy. And here's the real kicker. This £1 million allowance can't be transferred to a spouse if it's unused. It is strictly a use it or lose it allowance. And the changes do not stop there. First, pensions. For years, they've been this brilliant estate planning tool because they generally sit outside your estate for inheritance tax. Well, from April 2027, that exemption is being removed. Unused funds could become part of your taxable estate on death, which is going to be a huge shock for a lot of families. Second, trusts. Any new trust set up after October 2024 will now have to share a single £1 million relief cap per person who set them up. And finally, shares. Many investors in smaller, unquoted, or AIM-listed companies have relied on 100% business property relief. That's being cut to 50%, introducing a pretty significant new tax exposure. So, we have a whole new system of forms to deal with and a tidal wave of incredibly complex new rules on the way. This brings us to what is probably the most important point of all, navigating this new landscape correctly. What's really essential to grasp here is that these reforms place a much, much heavier burden on the people you appoint to handle your affairs, your executors and your trustees. They're now facing new caps, complex valuations, and far stricter compliance rules. A single mistake could be incredibly costly for your beneficiaries. Getting professional support is no longer just a good idea, it's absolutely critical. And this really is the key question to leave you with. An estate plan, a will, or a trust that was perfectly fine just a few years ago might now be completely out of date. It could lead to really unexpected tax bills because of these reforms. So it's a moment to just pause and ask yourself, is my current plan robust enough to handle what's coming? Now, before we finish up, a quick but very important disclaimer. The information we've covered today is for general guidance, and it's accurate as of January 2026. Tax law is complex, and it can change, so please do not rely on this as personal financial advice. Honestly, given the sheer scale of these changes, taking professional advice is the most sensible next step you can take. We highly recommend getting in touch with the experts at My Tax Accountant. You can call them on 0208-570-8531, or you can send an email to info@mytaxaccountant.co.uk. For more detail, you can read their complete article on this very topic on their blog. Just visit mytaxaccountant.co.uk/post/Form IHT100, add a complete guide. And for more updates like this one, be sure to subscribe to the My Tax Accountant channel on YouTube. Thanks so much for your time.